Good evening, USA. Good morning, Asia. Happy National Day, China. Welcome to the World Today discussion series hosted by the UCLA Center for Global Management. I'm your host this evening. My name is Chris Tang. As a faculty director of the Center for Global Management, it is a privilege for me to moderate today's event. Today's event is also co-sponsored by the Eastern Technology Management Center, as well as the Great China Business Association. Over the next hour, we shall discuss about recent events that happened to various China's tech giants and the implications for the investors as well as the tech sectors. Before I introduce our distinguished panelists this evening, let me say a few words about today's topic. Most people think of China as a factory of the world, but this depiction is outdated. In March 2021, China announced its 5-year plan to become a world leader in technology. In 2014, China launched the Mass Entrepreneurship and Mass Innovation Campaign. Various unicorns such as Alibaba, Tencent, Didi, Meituan became the poster children of China. Given this backdrop, it is very surprising to see how China has clamped down on some of these Chinese tech giants in recent months. For example, China stopped Ant Financial's IPO in Hong Kong and Shanghai in November 2020. In late June, there was a sudden ban of Didi's apps just 3 days after its IPO in the United States. By September, there was a report stating that this sudden change of heart in China has cost the investors over $3 trillion. Also, according to a survey conducted by our UCLA Anderson School, 30% of our response, they are not worried. But 27%, they think that investors should be worried. Now, this sudden change in China actually raised many questions that we're going to address tonight. First, why is China's government clamping down on these tech giants now? Why not earlier? Second, what are the implications for the investors? Third, would the tech giants in the United States face the same problem in the future? To answer these questions, it is my great honor to have 3 distinguished panelists joining me today. So let me introduce them in turn. My first guest is Gordon Orr. He is a senior advisor and former chairman of McKinsey Asia for over 30 years. He is currently serving as non-executive board members of many companies, including Lenovo and Meituan. Gordon received his MA in engineering from Oxford and his MBA from Harvard. Next up, let me introduce Ken Sansom. He is a global director of professional service at Amazon Web Services. Before Amazon, Ken has served as president and CEO of Asia Pacific at Experian. And also, he has served as partner of IBM and PwC in recent years. More importantly, I want to point out, Ken is our proud alumnus of our UCLA and U.S Executive MBA program. Last but not least, my third guest is Professor Feng Zhu. Feng is a professor at Harvard Business School, and he is an expert in technology and operations management. He has published many research articles on platforms, and also he has written numerous cases about Alibaba, Pinduoduo, and Ant Financials. And he received his PhD from Harvard University. And today is his son's birthday, and I'm so grateful to him for his willingness to join us this evening. Feng, since that you're the last person I introduced, I want to begin with you. Our audience is familiar with the Uber as a ride-sharing platform. Grubhub is an online delivery platform, and Amazon is a platform for buying products from the third-party merchants. Now, but some of our audience may not familiar with the business model of the Chinese tech giants, such as Alibaba, Ant, or Pinduoduo, or Didi, or not. Can you explain briefly about how these tech giants in China, they're different from the U.S. counterparts? Please.
Thank you so much, Chris, and thanks for having me in this great panel. And it's really a great pleasure to see everyone and to have a chance to just share like some of the research findings with you. And yes, this is actually an interesting kind of a question in the sense that if you compare like the tech giants in China and also compare to their counterparts in the US, you quickly notice that these tech giants in China, they have strengths in what I would say three areas. One is like essentially business model innovation, right? So if you take Alibaba as an example, the company was founded in 1999 and initially as a B2B company connecting business to business, essentially manufacturers in China. And Alibaba started Taobao in 2003. At that time, actually the number one, right, like a C2C player in China was actually HNet. Right, at that time, HNet has like a dominant market share, close to 70-80% market share. And Alibaba started with a very different kind of business model in the sense that Alibaba decided to offer Taobao for free, right? And HNet later on was acquired by eBay, and eBay actually wanted HNet essentially to adopt the eBay's US business model. Essentially, for each transaction, HNet should continue to charge like a commission rate, right, of 10%, right? So as a result, as you would imagine, because HNet charges a commission fee, it didn't want like sellers and buyers to communicate before an order is placed on its website. And otherwise, like it's possible that the sellers and buyers may disintermediate the platform and transact directly. Right. Versus if you look at Alibaba's business model of offering Taobao for free, right? And then there is no concern that the sellers and buyers could actually transact off the platform. So Alibaba actually encouraged the sellers buyers to communicate with each other by even providing like a charting programs like Ali Wang, right? So that the buyers and the sellers can just chat even before they agree on a particular transaction. Right. So in just a few years, right? I mean, the market changed dramatically, and Alibaba like became like essentially as a number one in China, and the eBay, HNet eventually quit the Chinese market, right? And so there are many other reasons, but as you could see that I mean, Alibaba started with a different business model for Taobao, and many people at that time was questioning, how could Alibaba ever make money if it's providing essentially platform services for free? But I mean, today, if you look at Alibaba's Taobao platform, Alibaba was able to make tons of money just through advertising, right? Because all the sellers are providing very similar products, right? I mean, for Alibaba to display one seller at a very attractive location, I mean, just like what Google does, like, I mean, many sellers choose to advertise, right? And choose to pay Alibaba for this attractive locations slots on its website. Yeah, and also like this Chinese company, the second thing you'll notice from this Chinese company's kind of a growth journey is that they are very good at the leveraging data and the installed base to expand the scope, right? And essentially building this kind of a super apps instead of just staying in one industry, right? So just take Alibaba as an example again, right? So the journey continued with Alibaba realizing that it accumulated lots of data on its platforms through all these transactions, right? So later on, in addition to Taobao, it also separated the business from regular like a kind of a sellers, right? I mean, so it opened up as Tmall, right? In addition to Taobao, and with all this data, Alibaba noticed that it could actually offer many financial services as well, right? So initially, Alibaba started with this Alipay service, which is very similar to like a PayPal in the US, right? In the sense it allows essentially sellers, buyers to kind of basically conduct transactions. But very different from PayPal, which stayed more or less the same over the past decade, right? Alipay actually kind of quickly kind of grow, right? And Alibaba leveraged Alipay actually to grow into lots of different businesses, right? Eventually started an independent company called Ant Financial, right? So for instance, like Ant Financial leveraging like all the data collected from like through Alipay, it started to like issue credit card. Issue like a kind of a credit scores to consumers, right? So because most of the consumers in China, they do not have credit scores, right? But using data, you could actually evaluate each customer's like a kind of a risk profiles and can actually give like a credit scores. That also makes like essentially life much easier for many consumers, because with credit scores, right, they can kind of easily get loans, right? Indeed, later on, right? I mean, Ant Financial started to also provide loans to consumers through a service called Ant Credit Pay. Right. And with all the data from the sellers, Ant Financial was also able to provide, for instance, loan services to these sellers, right? In the sense that, for instance, before like these major holidays, right? Double 11, for instance, many sellers wanted to kind of borrow some money, right? So for instance, to kind of prepare for this Double 11, right? By building inventory ahead of time, right? I mean, so and financial was able to help because it knows, right? Essentially the sellers kind of historical performance and can predict how well seller would do, right, during the holiday season, and can actually provide such short-term loans. And also leveraging like essentially its user base, and financial started to offer money market kind of services, right, through this service called the Yuebao. And the Yuebao within a very short period of time became the largest money market service provider, right? So this is another example how like Chinese companies can leverage essentially data, right? Leverage installed base to expand scope rapidly, right? And another thing you would notice through like these tech giants is that in China is that they're actually very good at competing, right, in emerging markets, right, and also growing through leveraging like kind of essentially our different features, right, in these emerging markets. For instance, like Chris, you mentioned the Pinduoduo, right? So I mean, Pinduoduo's growth, right, initially started with its penetration in rural market, right? It started to like target these rural customers by providing very low cost products. And this, of course, is very unique in the sense that if you think about the U.S. market, right, rural versus urban, like the difference is not substantial. But in China, the rural market functions. Rural markets function very differently, right, from the cities, right? So Pinduoduo was able to attract these rural customers by offering different value propositions, and started to grow, and eventually, right, started to penetrate the first tier, right, like or second tier cities, right? And similarly, like Didi, right? I mean, when Didi got started, Uber is already like there, right? I mean, so but Didi competed very aggressively, right, with Uber, eventually absorbed Uber's China business, right? And at that time, Didi was literally the largest ride-sharing company in the world, because it has serves more trips than all other ride-sharing companies like combined in the world. Yeah. So this is another example to show that these Chinese companies can compete quite effectively, right, in these emerging markets. Yeah, I would stop here.
Thank you so much. Yeah, thank you so much, Feng. It's really fascinating in terms of how the Chinese company, they really use a free service that enter the markets and then to grow. As they grow, then they also have the scale and then the scope, and then use the data to leverage. Maybe I can pivot to the other panelists, even Gordon. Now, in China, this is a really fascinating model. How come we don't see that in other countries? How come other countries do not follow, do not copy this kind of from scale to scope to using data to grow and to compete? Is it common?
A couple of unique characteristics. Obviously, one of China is scale, and the second is the absence of, industry regulation for an extended period of time that has clearly come to an end at this point. And I'm not sure if you want me to touch on, what's going on in regulation at this point, Chris, or come back to that later.
Okay. Yes, very good. So you said that because of regulation, that is really a fascinating point. So I think that now I'm going to turn to Gordon at you. Now, I visited Alibaba in Hangzhou, and also I have worked on a couple projects with Didi. And I also find the business model fascinating. And also they're willing to really change very quickly. Every single week, they come with something new. Now, that's why they're very successful. But then it appears that out of the blue, the Chinese government decided to clamp down on these companies. And then the question is what has happened over the last few months? And also that is why. So I would like Gordon, you're based in China. Can you share with us what is happening? It seems we hear all this news every day.
Yeah, I think if you were in China, Chris, you'd sort of have seen more of a build-up of some of these, changes, and that there's been more of a journey here than certainly there's been an acceleration in 2021, and partly that's a maturing of the regulatory environment. Partly it's some new priorities coming out with the 14th five-year plan. But I think we can divide the regulatory, initiatives into three, and they all touch on the internet platform, but they go broader. I mean, the first I would argue is one around social engineering under the label of common prosperity, which essentially is about trying as a government to level the playing field of life, to increase the incomes of lower income households, to reduce the proportion of their income that they have to spend on healthcare, on education, on housing. And healthcare, that initiative has been going for several years. Education has happened very aggressively in the recent past, and that there's clearly a top-down belief that the role of the state should play a larger role in education. Education should be non-profit, and that frames the actions that have been taken. My personal view is that won't fix the problem, because the education system in China is still exam-based, and until you address that, people are going to find ways to try and prepare their children for the exams. But more broadly, common prosperity is around potential for an inheritance tax, the potential for a property tax, taxes that you would frankly regard as normal in the United States or any G7 country, but don't exist in China today. But common prosperity is probably the overarching thing. Then the second is national security, and that particularly affects the data area, the data security law, the personal information protection law, which frames what types of data, what kind of hardware it should be stored on, what kind of software should be used. But it's around also just strengthening, GDPR plus type principles of minimal data collection, outlawing illegal information trading, creating a channel for public complaints. At the personal level, quite a lot of good things in there. But for businesses, the data security law clearly creates some hurdles and some burdens in that it makes it much more challenging to run your data network on a seamless global basis and to transfer data in and out of China. That's going to be challenging. And then the third is industry behavior. And that's really what most people are getting excited about when they look at what's going on in China today. And that's targeting things like exclusivity arrangements, elimination of competition through M&A, underpaying workers, forcing them to work in unsafe conditions, selling below cost, price discrimination, abuse of third-party data, and the like. And between competitors, blocking access to other apps from your app, spreading false competition on information on competitors, fabricating product reviews. Frankly, the elimination of most of those would be things that in any well-regulated country you would say that shouldn't be happening. Regulation on a lot of this has been catching up. It wasn't well advertised that it was coming, and it definitely came as a shock to management and to some investors. I do want to reflect on this, though, that I think Beijing, the government in Beijing has recognized that the implementation of these initiatives has come across as unsophisticated, uncoordinated, and unaware of the economic impact. The fact that the non-economic agencies like the Ministry of Education, did the Ministry of Education consider the fact that their actions would lead to the instant layoff of 2 million people? No, they didn't. Does CAC consider the economic impact of all of their moves? No. Has there been a piling on of agencies? Yes. Lack of So now when you see any of these announcements, you see this long list of SAMR and 9 other agencies agreed to follow. It's like CFIUS in the US. It's like the Treasury and 16 other agencies agree the following. But there's definitely a correction process underway. And the agencies have been asked to, in some ways self-reflect on where have they got to at this point, clarify what their goals are, and work together towards them. So we're not going to remove any of these new boundary conditions. They're part of the new playing field, new quote unquote level playing field for businesses going forward. But the intent is not to suppress or to eliminate business models. It's to eliminate monopolistic behavior, unfair competition, disorderly use of capital, and the other things that I was framing, Chris. So let me pause there for now.
Well, thank you so much. This is really fascinating. Now, so that means that probably in hindsight, maybe the Chinese government could have coordinated better, could have communicated better, and all this. So I think the reason you explained really makes perfect sense. Now, but then in terms of regulations, issues about antitrust, data security issues, that is really a good point for me to pivot to Ken. Now, Ken, let us switch our attention from China to the United States. Now, Amazon, Facebook, and Google are facing similar issues, such as unfair competition, antitrust, consumer protection, and fair competition. In July, Jeff Bezos testified at the hearing before the Senate Judiciary Committee about Amazon's practice. Now, I wonder if this event would it trigger in China, would that trigger some of this issue happening in the US in terms of due to the technology, the business model? Which is it? Given your extensive leadership role in the technology sector, can you share with us about your perspective on this issue? Ken, you're on.
Sure. I would probably include Apple in that group if we were looking at the US. And I think both technology and business model are factors, both in China and in the US. But as Gordon highlighted, there are many, many other factors other than technology and business model. In fact, I think if China was really focusing on monopolies and oligopolies, we'd see the same level of scrutiny on state-owned enterprises. But as I said, technology and the business model are factors. And I think if you look at the underlying technology that big tech is using, it's things like microservices architecture, continuous integration and continuous deployment, DevOps, metrics-driven development. And the advantage that this gives tech companies is they can learn faster than their competitors, and they can adapt faster than the rate of change that's going on around them. I can give you an example. If you look at Amazon.com, some people are surprised when I tell them, on Amazon.com's website, we make more than 50 million changes to the production code a year. On an average weekday, it changes every 11.6 seconds. We deploy that to, on average, 10,000 machines, but it could be as many as 30,000 machines every 11.6 seconds. Your version of Amazon and my version of Amazon are different as we do A/B testing. We capture tons of metrics to guide that development. And Chinese tech companies are the same. So they're really adept at using these advanced technologies to learn and adapt. Now you contrast that with my conversation with the CIO of a very large global bank who told me that they make production changes to their core banking app every 10 months unless it's a regulatory emergency, and then they do it on a 3-month basis. So, imagine that two companies are going to build a mobile app. One of them does focus groups. They develop it, and they launch it 10 months later. The other one releases a minimum lovable product after 7 weeks. It captures data and metrics on how people are interacting. It segments customers, maybe it's doing A, B, and C testing. It releases changes every day, or maybe even every hour it's releasing changes. And it's measuring how people are interacting with the platform. You know intuitively which one is going to develop the better mobile banking app. And that's a competitive advantage. That underlying technology is the competitive advantage. But I also think it's the business model. And there's two aspects to that. One is you have to recognize that all these businesses we're talking about generate a lot of free cash flow. And that allows levels of investment, and as Gordon highlighted, M&A, that has the potential to stifle competition. But I think the biggest business model aspect is it relates to data. And Feng Zhu talked about this. Data is the gold of the 21st century. The ability of big data to capture and use that data for analytics, for machine learning models, data from devices, and to do that at scale and in real time is a game changer. And I think the fear is that that data and the platforms that are built around that data and these business models that reward volume, it creates conditions where it could lead to an abuse of power. So I would say both technology and business model.
Thank you very much for sharing your perspective. Now, but then I have the following question. If data is going to be the future of the world, the big data, analytics, machine learning, AI, and whatnot, right? So that means that if you're bigger the company is, the more sophisticated the company is with a competitive advantage. I get that. Now, but then in the context of common prosperity that China is pushing, so how do we actually level the playing field? For the small companies, how can they compete with all these giants? If you're a startup, there's no way. You don't have the data, you don't have the scope, you don't have the scale. So where do you start? So let me ask this question about for Feng, because he is a strategy on platforms. So Feng, I want to ask you, now you know that if you look at all these giants around the world, if you're the new entrepreneur and you have a limited capital, you have a limited fund, where do you start? Is it possible to even enter the market?
Yeah, so thanks. This is a very interesting question, right? So first of all, right, there is a general movement, right, both in China and also outside China, in the sense that we are pushing for more interoperability, right? In the sense that the app, small, even if you are small entrepreneurs, as Gordon said, if you are developing just the app and you shouldn't be blocked, right, by these major tech giants from accessing, for instance, customers on their apps, right? So for instance, Alibaba today, right, for instance, would allow WeChat Pay on its e-commerce platforms, right? And in the past decades, and Tencent probably blocked lots of kind of apps from accessing its WeChat platform. But it seems to be the case that the government is pushing for these platforms to be more open, right? And instead of letting them block competitors. So this gives basically entrepreneurs essentially a chance, right, to have access to the installed base and also obtain data they need to grow, right? That's one thing. Another thing is that, of course, right, even though we think that, okay, data could kind of generate competitive advantages, but we have to also be aware that the data also has its own limitations, right? And also there could be substitutes to existing data, right? So some of my research even look at for instance, how fast the value of data obsoletes over time, right? In the sense that, okay, so Alibaba may have been in the industry for since 1999 accumulated tons of data, but does that mean the data Alibaba had right in the first 5 years are still valuable today, right? So if it is, then that itself serves a significant barrier to entry. But if the world is moving so fast that maybe only the recent data makes a difference, then this gives entrepreneurs lots of hope, right? They might be able to able to grow for a while, accumulate enough data, and also compete successfully. And so these are the things that I think in general, and also government is also putting more effort in making sure that as Gordon said, big platforms cannot abuse their market powers, right? So for instance, if you buy something on one of these platforms, and these platforms cannot use data, right, to basically to discriminate customers, right, to make more money, right? So this also gives a hope, right, to entrepreneurs that they might be able to also compete on an equal basis, right, in a level like a field with these incumbents.
Well, thank you. Well, but I'm curious, maybe going back to Gordon's point, in terms of data is everywhere. And yes, I understand some data may not be that useful, but they have more data than the newcomer. Then the question is should there be regulation for this tech giants to open up the data to others, such that to become more level playing field? So Gordon, what do you think about in terms of data sharing? But then you share data, there's also data security issues as well. But then the question, would that lead to a fair competition?
Well, I think just as I jump into that, I think there's also the point of having the right data. I mean, Ali could have lots of data, but it just could become, as Feng said, obsolete, and a new entrant maybe can have a whole set of healthcare data or travel data that's innovative and more competitive as a start. I think we're actually probably heading in the opposite direction in China, because I think there's been a surfeit of data being traded around by third-party companies, of banks selling data, telcos in particular selling massive amounts of data without consumer permission. And I think one of the things that the personal information protection law is going to require is it's going to give a vehicle for individuals to basically take civil action, to use a Western phrase, against those companies going forward. And I think the push in China is to restrict the sharing of unapproved sharing of data. If you as the consumer wish to have your data shared, there will be vehicles to do that. But will there be company to company data sharing without consumer permission going forward? No, I think China is going to be much more similar to the European Union than it is to the United States on that.
Well, thank you. Yeah. Now, okay. So now there are more regulations in China. Now, do you see that the regulations is coming to the U.S.? Ken, what do you think?
There's already a lot of regulations in the U.S. I think there's some commonalities and there's some differences between the U.S. and China. I also would just say on the data conversation, I think there's new sources of data coming all the time. There's new devices that are generating data. Your coffee pot's going to generate data, or your teapot. There's public data sources. There's people who are now doing satellite imagery and selling that data on the public market at a level of granularity that wasn't available even, a year ago. So I do think we are going to see more data sources. But to answer your question, I think there is regulation. There seems to be more focus on, perhaps in the U.S., changing the antitrust laws. We are seeing lawsuits filed. We see, but I would also just say we see commonality and we see differences between the two. So I don't know if the U.S. is going to be exactly like China, but I think we're going to see some regulations. I think both have concerns over data privacy, as Gordon talked about. I think exclusivity arrangements, data and platforms, that could squash small businesses or concerns. I think there's fear that private companies know the populace better than the government. And that's probably common in both countries. And it involves humans and egos. And so I think sometimes it's politically driven as much as economically driven. But I think there are differences as well. I think clearly, you know, if there is a clampdown in the US, the rule of law is going to mean it's going to be a lengthy process, and antitrust lawyers are going to get rich. There's hundreds of millions of dollars that are going to be spent. We all saw that the Microsoft antitrust case went on for over a decade. I think where China is a little more concerned about digital security, I think we also saw recently in the US where big tech is viewed as a solution to things like cybersecurity, and the session that Biden hosted with big tech. And I also think you have to recognize in China that they are a major shareholder of some of the competitors of big tech. And so I don't think you'll see that case in the US where the US is going to benefit on the other side. If you think of the carve out of Ant and who's going to get all that transactional data and who's going to benefit, it's probably going to benefit the shareholders of the state-owned enterprises. So.
Great question. This is fabulous. So I want to follow the question. Right now, we talk about the antitrust lawyer is going to be the winner. Now the question is, as more regulations coming into China and also in the US, are there any winners in the playing field? What do you think, Gordon? Are there any winners besides the lawyers?
In China, I think undoubtedly the consumer is a winner here. The business models are going to continue to exist. Ride sharing is going to continue to exist. Community grocery purchase is going to continue to exist. You know, instant grocery delivery. I mean, all of those services are going to continue to exist. And if the industry develops in the way the government works, it's going to be in a more orderly fashion, and consumers should have more confidence in how their data is being used. Now that's a positive, outcome, and I think it's almost in some areas the consumer will be a benefit. I think you can also make a pretty strong case that gig economy workers are going to benefit to some extent, not massively, but to some extent, because they, the major players in the industry, DD employs 8 million, the food delivery is probably 5-6 million folks. The regulators will absolutely ensure, and the major players will absolutely ensure that their gig economy workers are paid not just the salaries that they're due, but the social benefit contributions that they're due going forward. Now, I'm squeezing this to benefit the consumer, I'm squeezing it to benefit the worker. Yeah, probably the investor, is not on that list of winners right now, and that's been recognized in the marketplace. But we'll have to see how that, evolves, over time. And I think investors should take a long-term view, but I would say that as a board member, wouldn't I?
Yeah. Oh, thank you. Well, now I'm curious. When Gordon saying that the benefit would be the consumers, maybe the workers, is it due to competition? That means that with these regulations, maybe level the playing field, then it will encourage more smaller companies to enter the market without being acquired. Because before, Alibaba tend to acquire all the small companies. With more competition, then maybe the price is going down, maybe getting the workers will be going up. So as a result, then the case would be maybe the sharing the value more evenly. Would that be the case? Fang, you work on all this platform in terms of how the platform subsidize one side to the other side. So would this kind of regulations would actually contribute to a more maybe perhaps a more equitable share of values among different players?
Yeah, I think with such regulations, like in the end, we should see more players to be able to enter markets, right? And so, for instance, like if platforms cannot, like e-commerce platform cannot demand exclusivity, right, from the third-party sellers, it definitely allows their competitors, right? I mean, like these small competitors to be able to attract these third-party sellers and encourage these third-party sellers to easily multi-home, right, on multiple platforms, right, operate on multiple platforms. That kind of allows like multiple platforms to exist, to compete. And just as Gordon said, more competition certainly would bring more benefits to consumers. I would also kind of just build on what Gordon said, like all these traditional firms, right? They like would also benefit, right, from this regulation. In a sense, like Gordon mentioned, this community grocery buying, for instance, right? So if you allow these big platforms to like do heavy subsidies, right, and with the hope that you might actually squeeze out all these traditional players that in the end may raise price later on. I mean, and if you the government regulates industry a little bit, that gives like essentially all these traditional grocery marketplaces to survive, right? To be able to survive the competition against this kind of community buying platforms. And similarly, like if you started to regulate the fintech industries, that also allows like banks, right, to do better, right? So they could also benefit from such regulations. Right? So in the end, I feel like I think increasingly, not just in China, but globally, I mean, I think there is a general kind of a trend in the sense that the governments, the regulators started to realize that even though these digital platforms are adopting different kind of business models, maybe they are platform models, they use technology more frequently than traditional companies. Ultimately, they are fulfilling very similar, essentially, customer promises. They are creating very similar value, right? So if you look at, like, for instance, Ant Financial's mission statement, it's about essentially enabling like consumers or small businesses to have access to financial services, right, through technology, right? But you could argue that the banks are also doing similar things, right? They're enabling consumers, businesses having access to financial services, and the banks also use technologies, but in different ways, right? So in the end, like I think many regulators started to, I think, realize that given that they are fulfilling similar customer promises and creating similar value, having similar missions, maybe we should hold all these companies to more or less the same standard, right? They should kind of follow same kinds of regulations rather than making exceptions, saying, oh, you are kind of a fintech company, as a result, you are different, right, from traditional financial institutions. So that's probably part of the motivation why, I mean, governments or regulators across the world started to regulate digital giants, in recent years.
Wow, that is really fascinating discussion in terms of the benefits. The regulations can actually create some benefits to the public. I think that's wonderful. Now, in view of time, I'm going to shift it to the questions submitted by our audience, and then I'll come back to wrap up the tonight's event. Let me switch to Slido, and there's some questions submitted. The most popular questions ranked the highest is from William Gu, UC Anderson 2020. The question is, China has not yet opened its financial markets to a level that it promised to WTO. So what is a chance for Chinese fintechs to compete when it is fully opened? I throw it out there. I think, Fang, you wrote the case for Ant Financials. What is your take on that?
Yeah, so this actually builds on the earlier points that, I mean, in the fintech sector, I mean, I think the data is quite important, right? So, I mean, the data would give like these incumbents lots of advantage. And the second is that, I mean, typically, like, I mean, I won't say kind of just China, but all countries would think that this financial sector is important for the whole country, right? As a result, I mean, it's important essentially for local companies, right, to essentially operate really well in such sectors. So these local companies will actually continue to receive support from the government, right? So I would say that even if fintech sector opens up, right? I mean, for kind of a foreign companies, the best entry model is still to do lots of collaboration, right? I mean, maybe making some investment rather than doing this greenfield entry, right? Essentially start a company locally by itself, right? Completely controlled by a kind of a foreign company. And the additional complexity, of course, is that navigating this regulatory landscape in an emerging market is also very challenging, right? So, these domestic companies, they have advantages because they have been there for a long time. And so it's actually very difficult for foreign companies to enter by themselves very successful. That's why, like, if you look at like how kind of Ant Financial expanded overseas, it's always through some kind of partnership, right? It's not never through like some kind of just to say, okay, I'm going to enter and grow myself in another country, because it's just very hard, right? You don't have the data, you don't have the government relationship, you don't understand the regulatory landscape in a foreign market, right? And how it's just very difficult for a foreign company to grow. So yeah, the same would be true, right? When a foreign company tries to kind of enter the Chinese market.
Well, thank you. Gordon and Ken, do you have any additional point to add to this question?
I mean, I broadly agree with it. I think, I just emphasize that, given the size of China's financial market, when China has actually probably opened the financial market up more in the last 18 months than it had in the previous 5 years. And you've got, folks like Fidelity and UBS and Schroders and Aberdeen and many more, buying out, I mean, less moving in organically, but buying out their local partners and moving to 100%, foreign owned at this point. And their aspiration may be to get 3-4% market share. And that's, their primary driver of global growth in the years ahead. So you can be successful in the financial sector in China with a relatively modest market share.
Okay, thank you. Well, now let me move on to the next question. I think the next question related to Ken. This question is from Krishna Chidambaram. It's our AMBER program in 2022. The question is, what will be the impact of personal information protection law on Amazon and other firms when it goes live in November 2021 in terms of personal information protection law? How would that affect Amazon?
Obviously, I'm not a spokesperson for Amazon. I'm just an alumni here talking in general about big tech. So I would just say that, I think all over the world, there is increased emphasis around data privacy and consumer protection. And, there's different approaches being adopted. I think there's an approach in the U.S. and a different approach in the EU, and China's probably adopted something somewhere in between. And I expect this, as always, that all of the players in the market have to comply with the regulatory environment that they operate in. And I would just also comment, it's important to recognize that consumers have tremendously benefited from big tech, both in the US and in China. And as somebody who lived in China and tried to get a taxi before Didi, how could you say it's not better? So even in the big tech era, consumers have benefited tremendously. And I think that's going to be part of the discussion on, is there consumer harm? So.
Okay, thank you. So now moving on. The other question is anonymous, so I don't know who wrote the question. The question is, how do new regulations in data storage and elsewhere further disadvantage non-Chinese companies doing business and gaining market share in China? Because in terms of how did they really, the regulations about data storage. Gordon, you're more familiar with the China landscape. Can you share with us about your perspective?
Sure. I mean, I think part of the challenge for many multinational companies is the ambiguity in the way the regulations and laws are written, that it makes it quite hard for your legal team to say, yes, you're compliant, no, you're not compliant. And so there's a lot of management time just gets sunk into trying to work out how to be compliant. And it's the case in many Chinese situations. I mean, the law is intentionally written that way, and to encourage companies to over-deliver on being compliant. Now, the having to store your data in China and not necessarily be able to connect it seamlessly to your global network. If your competitors in China have masses more information, more data than you do to get insights from, and then you're constrained to a smaller set of data in China, that's a competitive disadvantage. You may need to use unique hardware in China to be compliant, China-specific hardware. And that will presumably be compatible with your global network ultimately, but it's an additional cost and additional complexity. It needs folks to deal with that going forward. And I think on the software side of things, there's relatively little at the moment that you'd have to do on using China-specific software, but that might come down the road. I think for state-owned enterprises, there's more of a burden on that at this point, not for multinationals. The kind of area that I think is going to be most challenging is in something like your global R&D network. If you run a global, seamless R&D network that has nodes in the US, in Russia, maybe in Poland, in the UK, in France, and in China, and you can't seamlessly move data from research projects around the world on a daily basis, that creates enormous frictional costs. And I know, a number of multinationals are trying to work through what this means in practice, because clearly the intent of the Chinese government is not to scare R&D centers out of China. If anything, strategy is to do the opposite. But the potential interpretation of the data security law is going to mean that some companies are debating, can they continue to run a global R&D network that includes China? And it's going to be something that has to be addressed by government and business in the years to come.
Wow, this is a really fascinating comment in terms of once the data security regulations, then how do all these R&D centers located in different countries to share information knowledge that remain to be seen? Now, so there's another question coming in. This is from Omar, UCL and US candidate. So the question is, aside from the tech giants mentioned such as Alibaba, which Chinese tech companies in the healthcare space are seeking to grow to capture the US markets? Is any healthcare Chinese companies?
I think it's pretty challenging because of the inverse of what we've been talking about, of US government sensitivity towards Chinese companies accessing, personal health information of US citizens. And I think concerns over whether they'd be within the Chinese company about whether they would be allowed to access that data is leading quite a number of companies to hold back from bringing the med tech services to if that's what we're talking about, data intensive companies. I think that's definitely the case.
Thank you. Feng, do you have additional comment to make on this?
Yeah, Bill, actually, I completely agree with Gordon's comment, and just building on Gordon's comment, like even if you just look at like a industry like where TikTok is operating, right? I mean, you would think that the data in that industry shouldn't be that sensitive. It's just about like what kinds of like short form video clips I'm watching, right? But the US is already very sensitive about like where you store the data, whether we should allow a Chinese company own that kind of data, right? Essentially, what kinds of videos I upload and I watched, right? So if you kind of extend that into a very sensitive area like a healthcare, right, it's becoming even like a lot more challenging, I think, for Chinese companies to enter US very successfully.
Yeah, definitely. So I think that in terms of healthcare is a very sensitive sector. Now, I would like to ask Ken the question along this line. Amazon, now their pharmacies are selling in terms of prescription drugs in the US. Do you think that this model can be replicated in other countries in terms of Amazon pharmacies?
I don't know. I'm not close enough to know the regulatory environment around the world and what the competitive advantages are in that particular space. I think I'm not qualified to really answer that question.
Okay, well, understood. Yeah, because it depends on the regulations in different countries. Now, for healthcare equipment, I do know that Mindray, which is a Chinese company, they do quite well in the United States. But for drugs, it's a highly sensitive sectors. I think that like the online platform, like 111 in China, I think it would be a challenge for them to replicate the business model in other countries because of personal security informations and also health safety issues as well. All right, so in real time, there's one question I was waiting to ask you, but then one of the participants has submitted questions, but it's anonymous. Is China still an attractive market to invest, given all these crackdowns? Is it time to pull out from the tech investment, or is time is buy low and sell high? Is it time to enter the tech sector in China? What do you think? Gordon, start with you. How will you vote? It's a good time to buy now because if the price is low, it's half price. I checked the price. ED started from 14 down to 7. Alibaba 300 down to by half. It's a half price, 50% off. Is it time to buy now? Gordon.
Look, if I was I made my career being an advisor rather than an investor, so I'm probably not the best person to ask. I do think these business models will, as I've said, are intended to continue to exist, and they provide great benefits to citizens. I think you need to understand how much the regulatory constraints do impact the economic model, and work that through. I suspect over time it impacts them less than the immediate reaction has been from investors. And I do think there's going to be enormous amounts of innovation going forward. As Ken said, there's going to be so much new data in many areas. China's, the reinvention of China's manufacturing base that you started us off with today, with data, with AI, with IoT, reinventing the factory of the world with the technology of the 21st century, I think will keep a lot of factory and manufacturing capacity in China, and China's commitment slightly beyond, internet platforms into green technologies of all kinds, are massive, and I think are, starting to pay off in many, many ways.
Okay, thank you. Well, next, Ken, what do you think? How would you vote? Is it time to buy the Chinese tech stock because half price discount?
I think it depends on your risk profile and your time horizon. I once asked somebody, a close friend in China, what they thought of the Communist Party. They said, we evaluate dynasties after 300 years. So obviously they had a different time horizon than I did. So I think, as Gordon said, these are important to society. These businesses are going to be around. And there's a lot of uncertainty of what's going to happen. If there's more alignment with the Chinese government so that the interests of these companies and the interests of the Chinese government become more aligned, I think you can see that these share prices will go up. But is it high risk? Yes. I would say, though, if you're looking for tech, as an employee in a U.S. big tech company, there's never been a better time to buy. But maybe I'm biased.
What is your take on this? Is it time to enter the market again?
Just like Ken and Gordon, right? So since I'm not really trading stocks actively, so I cannot give any stock recommendations, especially like I'm not in the industry. But I would say that it's not surprising, right? We should be expecting like more kind of regulations, right, on tech industries. There will be more regulations coming out from the Chinese government, and particularly around, like, for instance, the area, for instance, data, right, and also platforms, right? And another thing we should also be mindful is, I mean, these regulations may enable more entrepreneurship, right? So as a result, there could be more kind of promising startups, right, joining industries, and because before, like, all this regulation or all this crackdown, and many startups were very concerned about competing with these tech giants, right? They feel like if I enter the market, that maybe like Tencent or Alibaba or other tech giants are interested, like there's no chance for me to compete. But with these regulations, right? So it becomes like a more level playing field. So they might actually enter. So there might be lots of kind of attractive investment opportunities, right? Around this kind of new startups. Yeah.
Well, thank you. Thank you so much for sharing your wisdom. So my understanding is that the tech sector in China right now is going through a transition, if you will. The Chinese government recognized that the regulations need to come in to really provide value, social value to the society. So as Gordon pointed out, there's maybe some form of social engineering to achieve common prosperity, so that little guys can also survive and big guys can continue to survive as well. So Feng, we also talk about in terms of how the business model is very innovative, starting from really the free service, enter the market, and then you grow the scale and then grow the scope. And then in terms of regulations, all the three panelists think that it is actually positive in the long run. Maybe a short run, maybe a little turbulence, but in the long run, will actually encourage more players enter the market, and then the consumers and the workers will benefit from that. So in that sense, maybe in the short term, the investment may be a bit risky, but in the long term, maybe it's a better one. As Ken pointed out, we have to look at the whole dynasty, not just look at on the monthly to month basis, right? So I think that also I observed some of the tech giants now, the state-owned enterprise is also taking some share of that. So in that sense, the incentive is aligned. So in that case, if you invest in these tech companies, your interest is aligned with the Chinese government. So it could be a win-win. Maybe they're signaling it's time to enter the market. It's half price. So in real time, I want to take this opportunity to thank our three distinguished panelists tonight for sharing the perspective, the wisdom with us, such that we can really enrich our understanding about what's happening in China and also the long-term implications. And I'm so glad that it is a positive outcome in the long run. So on this note, I'm going to end this evening session. I want to take this moment to thank everyone, the panelists and our audience. And thank you so much for the privilege of your time. Thank you. Have a nice evening and good morning, Asia. And we will continue our discussions next time. Thank you.